So with the markets jumping, at least at the moment, not as high as earlier, but still on the move, what's behind today's bounce? Or what was behind the bounce this morning and then a little bit of an afternoon fumble? To the floor show and our traders at the New York Stock Exchange and the CME, Kristina Partsinevelos standing by in the newsroom. And joining us live from Las Vegas, TD Ameritrade Executive VP of Trading, Steve Quirk. First to the floors. Tim, what was behind the morning bounce and a little bit of a PM fumble?
I mean, look, we had a 5% decline pretty much over the last 2 days. So, I mean, we were due for a little bit of a relief rally. We got a little bit of assistance overnight from the headlines about on trade with President Trump and President Xi planning to meet at the G20 summit. That spurred on a lot of buying in Asian markets, carried over into Europe, and we had a decent first hour and a half. And after that, we've been on the roller coaster ride like we were on Monday and Tuesday before the sharp sell-off.
Yeah, and you also got a little bit of a tailwind, Chris, from the Asian markets, which all closed higher, unlike the night before. But, Chris, what do you say the bounce really was stemmed from? Simply basic behavior of an oversold market?
Oversold market heading into the weekend. You know, in 6 days, the Dow broke 2,000 points. The S&P broke 200 points. And a lot of people came in today and after last night thought that maybe there was going to be another 1,000 points in the Dow. That would have taken us to the 10% level that everybody looks for. We were roughly 7% in the S&P and the Dow from the highs to the low. I tell you the one thing I saw that I liked, you had a bounce in crude oil. Crude oil had also dropped $6 in 6 days. And I think as soon as crude oil got a bid, you started to see more of a bid in the indexes as well. But all in all, I think this Friday, a lot of people just want to get out of here and take a rest.
No. Nobody can leave until we see that countdown go all the way down to the last second. Steve, you guys at TD Ameritrade have what, about 11 million clients with more than 1.2 trillion moving around. Tell us what you saw the last few days, the behavior with your clients, and where you saw the biggest moves by those clients.
Well, I'll echo his thoughts. I think what they're really anxious for is the market to close today. But what we've seen from those clients is normally they're fairly contrarian. What I mean by that is when we see sharp sell-offs, they are generally pretty aggressive buyers. And, you know, they've been rewarded by doing that for the last 8.5 years. What's changed a little bit here is they were buyers, but not very aggressive at all. In other words, it was almost 50% buyers and 50% sellers. And if we dug a little deeper, we look at who's doing the buying and who's doing the selling. It's actually the millennials that are the most aggressive buyers, the younger cohorts. And the people that have been in the market, the boomers, are the ones that actually have been more aggressively selling. And it makes perfect sense. They've probably been in the market a long time and seen some really nice appreciation.
Kristina, dig beyond the Dow and its losses over the past 2 days in this gain of 133 points. Where's the hidden wreckage that's going to bloat and float? What are we going to see here?
It's funny because I actually had this conversation with Tim yesterday on the New York Stock Exchange, and we were talking about the movement away from broad-based ETFs into bond ETFs. There was a lot of volume being traded at that point, and we're going to show you one graph that really exemplifies the difference just over the past week between TLT and SPY, so SPDR representing the broad-based market. Hopefully we can show you just literally the reversal of money moving away from those broad-based ETFs into the bond ETFs. And what you're seeing on your screen right now is a bunch of growth ETFs overall that have been falling lower than their 200-day moving average. You could say, hey, this is a buying opportunity, hence the rebound this morning. But if you believe there is further volatility in the market, we're going to have further lows. Even we're talking about being oversold, but that threshold could be even lower. Then that may not be the best move. And I don't know if you're talking about millennials. I'm not sure the millennials are moving into that.
Steve, that's what you were saying, that depending on people's ages, they were either buying or selling during these past couple of days, right?
Right. Actually, and if we look at what they were buying, and she's spot on, we saw an increase in people looking for exposure to fixed income. But I would also point out that the millennials tend to be more of stock pickers. They're going to pick individual names, whereas the people that are a little bit older and have been experienced in the market are actually using the broad-based ETFs and indices to get exposure to the overall market.
Tim, you venture to guess what happens Monday?
You know, I think we're probably still going to have some volatility in the market. Anytime you get a very sharp decline in a very short period of time, it's just going to take some time to shake out, and we're going to have sharp 100, 200-point declines. We're going to have sharp 200, 300-point rallies, and that's going to help us define where the intermediate-term support and resistance levels are for the next 2 to 4 weeks.